More selling is coming. I'm your host, Steve Van Metre, and thanks for joining me today. And the biggest buyers of stocks is gone, and machines, they're still selling. Let's take a look at what's going on in the markets on our Sunday show here, because we talk about these computerized models, these CTAs, and these are momentum traded models. And why do we look at them? Because the entire U.S. stock market in some form or another is becoming momentum driven. That's why we want to look at where these machines are trading, because they give us a good idea of where the market's likely to head. And let's start out here with this one from Metre. Now you notice it's blurred out because, well, this is proprietary information, and they said, I can't show you the numbers, but we can talk about in general where they're at, where they're looking to next sell. But we can talk about Goldman Sachs, who notes that on a global basis, it's hard to believe, but we still estimate they're buyers. And they say over the next week, perhaps there's 7.7 billion of buying from their machines on a big move, a buying of 35 billion, which isn't that much, and a down move would be 11 billion for sale. Again, that's over 1 week, but look at the next month, only 614 million of buying, telling you the machines are relatively short here. And a big move up in the market would lead to 161 billion of buying, and what would look like a short covering move, and down big, 48 billion to sell. But do keep in mind those figures were as of Tuesday morning, and that could mean there would be more selling if things continue to fall. And we can look at this one from TD Securities, not to be confused with TD Ameritrade. You'll note that they're somewhat short with a lot more to go. And so these are all important triggers that we want to look at as we see where markets are headed next week. Now, one thing to note is the buyback blackouts, well, they're gone. This from Goldman. The window begins today. This on Friday with 50% of their S&P in their closed window. As a reminder, they typically expect flows to decrease by 30 to 35% during blackout. That means a third of all buyers in the market are gone, and they're out for a while now. And keep in mind, we also have month-end pension rebalancing. This is pretty typical, but also with asset allocation models putting selling pressure on the markets as they estimate 18 billion of U.S. equities need to be sold by month end. What do they usually buy? You got it. They buy bonds when they sell stocks. That's what these pensions do. They're balancing their equity and their bond positions. So let's take a look at where momentum's headed in the market and see where the charts say prices are likely to head, and these machines will be sellers again. Let's take a look here at the S&P 500. We note the momentum is still broadly negative. The RSI is under 480. That's the relative strength indicator. We have a negative cross on the MACD. Momentum Timer Pro by proprietary momentum screener notes 3 consecutive daily sell signals. Now, here's a one buy signal in the midst here, and you might say, well, what is this Momentum Timer Pro thing, and why'd you make it? It's because I wanted to build something that actually would try to beat the machines at their own game. I'll put a link up here to it in the corner and the description below. It's free for now very limited time, but let's keep looking at what we're trying to find out, because what I'm looking for is when MTP goes to from this daily sell signal back to a buy. You see there's a stop loss indicator here. You got a 1 month signal saying there's no position, it's on sell. We note that the mid range, the 3 months window, is headed lower down, only showing a mid size in terms of momentum, and the 6 month window is showing a minimum amount of momentum left, and these are scaling down. Next upside target in the S&P, well, we got 391 to 392. How about the downside? I think more probable with the blackout period, 372 to 373. Let's switch over here and look at the charts, and we've got the volume profile turned on. We've got the RSI. You can see it's down here at 37. Momentum's been slowing down. You can see the MACD is trending lower, and notably, when you look at the volume profile here over the last 2 years, where do you see these sellers at? They're all above. So despite the fact that there's this bull case for stocks, sellers have been dominating, selling above here, and notably, who's been buying that? Retail's been buying above that 2 year mark. Where is the downside target? Now it's all the way down here in support at 372, 373. Your upside is just above here into that supply zone. So right now we know that there was no surprise there's a little bit of buyers, because we've seen a little bit of buying in the zone before, but it's not really strong. So the bulls will need every effort they can to drive this higher. Otherwise, they risk seeing this head lower without corporations buying their shares back. Remember, a third of all flows are going away. Now, when we look at the weekly chart, one thing we've noted in the past, that if the RSI gets up into this low 50 level and spins around and heads lower, well, that's more indicative of a bear market. We're starting to see that trend now. Even the MACD on the weekly is rolling over. Now, one thing I want to show you is let's go back to the daily here, because I wanted to show you that what we're seeing in this topping pattern looks very consistent with what we see before, telling us that prices are likely to head lower. Let's go back to the charts. So what we're seeing here is this, what looks like a topping pattern. The machines are going to sell. If we zoom in, let's look at where the machines are next likely to sell is right here in this 372 level. You get a breakdown into here. That's going to be the trigger point where they start building into more of a short position, and that's going to take stocks down quite a bit. Now let's go back to what would be the great financial crisis. Let's zoom all the way back where it is. And we know we're in a somewhat similar position here where we had a topping pattern, market sold off and kind of rallied back, and everyone said, hey, this is a resumption. The bear market's over. And then all of a sudden, plunge, stocks headed lower. We see the same type of setup going back even into the dot-com bubble. You have a topping pattern, price came down, there was a bit of a rally, everyone's saying, okay, take a sigh of relief, and then a plunge in prices, and you get another one of those and another plunge in prices. So the reality is we're more likely seeing a big selling here than anything else. Now let's go back and take a look at what we have in the tech arena with QQQ, momentum being negative, RSI below 40, negative cross on the MACD, momentum time pro, 18 consecutive sell signals. So it's telling you, look, the probabilities momentum is to the downside. Upside target at 292, 293, downside target 260, 276 to 277. Let's head back to the charts. And what do we note here on QQQ? Same story, 2-year selling above. There's your breakdown, buying back up into this 292 zone. Sellers down here, the machines. You get down here to the support level, and that's what makes this really interesting to me, is you get down into that support level, and that's where we're going to see selling. And so that's the risk, is everyone's going to say, okay, hey, we're going to hit support, and then boom, machines sell, and everyone's going to get flushed out. Lost stop losses will get triggered. And again, there's no corporate share buyback to hold those levels. That's the risk we're facing going forward. All right, let's go back to the momentum screen. And what do we see next is the bond market. We've noted that there's been more selling. We talked about that over the last 2 weeks. That even Goldman said, look, there could be more selling if we see a bigger move down. We did. We're seeing here that the bonds are, if we look at G10, and we're looking at 4 of them, the machines are fairly net short. They're starting to slow down and get to the point where they're not going to sell much anymore. And what we heard from Goldman, and what you should try to understand here, is when machines get short, what happens is they lower their trigger point to short cover. And so what Goldman kind of suggested is we get into the FOMC meeting, well, what's likely to happen is we're likely to see short covering as these machines they just get real nervous when they get deep short. They need to see the markets go down further, or they need to start short covering. So that's what we're looking at here. What we noticed is the machines, after we saw some buying, yields came down. The machines got real aggressive going back to the short side, potential double top here, another reversal. This is a breaking point we're looking for to see the bonds come unwinding. Of course, we've got quantitative tightening doubling on Friday, though it's not going to hit the markets here until Monday. Looking at iShares 20-year plus bond fund, TLT, momentum's negative. The RSI is under 40, and ACD's got a negative cross. Momentum Time Pro, 26 consecutive days of sell signals. 1 month is down to none. The 3 month is at a minimum. 6 months is none, telling us that at some point this thing is likely to have a reversal because momentum is already pushed very hard to the downside. Next upside target is 111, downside target at 105. And mind you, we also have seasonals in play here. And so what the seasonals tell us is that September is usually a pretty poor month for bonds, but going into October, there's a reversal there. So we're looking at potentially more downside. Upside here is up to 111, right under here. Not a lot to look at yet. Could be the story for a coming day. Now let's take a look at, of course, we have the metals. We notice that the machines are fairly short gold. If you're wondering why they're short, well, because momentum's to the downside. It doesn't look like they're likely to sell much here at this point, although silver could be at risk. But notably, the machines are holding, watching for more downside. Will we see it? Well, I think we will. Let's take a look at GLD, momentum being negative, RSI also under 40. MACD's got a negative cross, momentum time pro 19 consecutive sell signals. Look at the 1, 3, and 6 month, all none. So potentially looking for a reversal or a big cliff. Upside target at 158. Don't know why I've got 3 decimal points there, but should be a dash to 159. Next downside target 147, 148. Let's head over to the charts. And what do we see for GLD? Well, we've got to zoom out because we can't see it on this chart. Let's go to the, here we go. So notably, we see this topping pattern. Now, if you're a bull, a silver bull, you remember that this is a pattern everyone said was going to go higher and it broke down. I want you to take a look at that for a second. What do you see now? A similar chart here telling us gold is going to eventually come all the way down. If you want it in gold futures, here you can see that beautiful topping pattern. There's your support at 1300. No, there's not a lot of buyers in between there. Support at 1300. So you can see gold looking to head lower in machines. Then would be looking to sell in a big way and get deeper in their short positions. And without a lot of buyer support, it tells you prices could go down quite a bit. All right, let's go back now and look at what we've got next on the momentum screen. We've got currencies, the dollar being maybe the only safety trade out there. We know the machines are pretty short everything against the dollar, and at some point they will likely cover unless the dollar breaks out. Of course, we think the dollar can break out easily. Momentum being positive. RSI is at 60. That's in positive territory. Although the MACD, which is, it often does kind of lead to the downside. It's got a little bit of a negative cross. Momentum Timer Pro back on A16 says you should buy it open at 28.54 with an initial stop at 28.31. Friday's closing in the positive 29.40. Upside target on 112 on the DXY on its way to 120. Downside target revised up now to 29. So maybe even tighten your stops up a little bit if you're in that trade. Let's take a look at UUP and DXY. Here you can see UUP big, beautiful bottoming pattern looking to break out. Every pullback gets bought. Hey, it's as if our chief strategist Jeff Snyder said, hey, there's a dollar shortage out there, and you can see it. Here we are on DXY 110 looking to 112 on its way to potentially 120, and it gets out of the market there. No, if it breaks out there, the market's going to unwind in a huge way. So, the big risk right now to the market is the machines are still in sell mode, but the blackouts, that's the big factor here. Buyback blackout period is open. That means all those corporate share buybacks are going away. Keep an eye on earnings, because if you start to hear corporations cut back on that, that means the biggest buyer is not only gone for now, but may not be coming back in a material way. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.